good morning and thank you for watching Sunrise at Sea. Welcome to our Wellness, Beauty and Lifestyle segment. My name is Aggie Oase and today we are talking savings and a savings account. Now, I know for sure that this has been something that so many of us have heard of. Everyone telling you save here, do this, open a savings account in a bank, or save up some money in a piggy bank for the future. They have told us that over and over again. But today we would like to get a perspective from a banker who has been in this business for quite some time, and that is about 10 years or so. Well, joining me on set today is Mr. Dennis Chibuka Musoke, who is the Executive Director of Entrepreneurs Financial Center. Good morning, sir, and thanks for joining us.
Good morning, Aggie. Thank you for having me.
Thanks for joining us. Yes, now we'd like to get a perspective from you as a banker who again has been in this business for quite some time, about 10 years or so. What is a savings account?
Yes. I think the concept of savings is not just about money. Savings is putting something aside for a rainy day. Even when you read the Bible in ancient times before Christ, that people put away, food or gold or items for a rainy day. I think savings is not any different. From a banker's perspective, savings is about money, and it is about keeping money to aside to meet needs that may happen in the future. It could be school fees, it could be emergency, like health. Sometimes you get health emergencies. It could be about having a contribution to buying a plot of land, a house, or even an asset for business.
Yes, and would like you to let us know the things to put into consideration before opening a savings account, and even after you've opened a savings account. What are those things that the viewer out there that is watching us today should consider?
Okay, thank you very much, Aggie. I think the first thing is where am I saving? So some people, we've had horror stories of people who have saved money in a mattress at home, and then the thieves come and they take away the mattress. We have had people who have saved money in a piggy bank, and
you break it any minute when
you can break it any minute. But I think the most important thing is where are you saving? I think I would recommend that everybody saves their money in financial institution that is supervised by maybe the central bank. And then the second thing is I would recommend that you save your money in a place that is not easily accessible. That you will not work. You will not get up one morning and then you pull out the money to apply it to a want as opposed to a need. And then the third one is about the return, that what is the ideal return that I am getting from the product that I am consuming. So some people who are very, very sophisticated, they will look at the inflation rate, and they say that if the inflation rate today is 5%, for instance, they will want a return on their savings that is more than 5%. But what I would like to tell to our viewers is that I think it is important to start from somewhere. That if you did not save because the return that you were getting on your saving was less than the inflation rate, after 6 months you will have nothing. Yes, it is better for you to have something that might have lost some little value than having nothing at all. Yes.
Okay, and I would like to ask, how does someone manage their savings account?
Yes, I think the most important factor when you think about savings and your savings account is what is the goal? What is the end goal? You can decide that I am going to save, for instance, for the school fees for my children. For people who are living normal lives like myself, who have children in the national curriculum, this happens, I think, 3 times a year. And then it is important for you to know that the money that I'm putting aside, the cycle is 3 times a year, so within 3 months, I need to have enough. You could have another need that, for instance, I want to start construction, or I want to buy a house. And you know that there are financial instruments like mortgages. You know, there are financial instruments whereby before the financial institution gives you their contribution, it is important that you have a certain percentage, let's say 10%, 20%, you might want to save for this. But I think for me the most important thing is for you to know what is the objective. Yes, what is the end goal, what is the objective. When you think about, when you agree with yourself what the objective is, that is when you will think about what we spoke about earlier, what is the financial institution, what is the ease of access. I would recommend that the harder that it is.
That's where we rule out having money on mobile money that you can, you know, get out any minute.
I believe that also the service providers of mobile money have some instruments. Yes. But I will speak that I will tell you that at EFC we can ensure that you have a specific savings product where your money is far away from you.
Okay.
And it can actually go.
Okay, and tell us a little bit more about the savings accounts, or the types of savings accounts that a viewer out there should venture into, because they probably do not know which savings account I should get.
Thank you very much, Aggie. I think the first savings account that somebody needs to have is, you know, the child savings account, which is opened by the parents. We spoke about this in another segment, I think, but it is important that when we get children, it is important that we introduce them to the banking sector by opening for them accounts. At this point, the account that you'll open will be in the name of the child, but it is managed by the parent really, and it is the parent that will put money in it. And then the other one is the regular savings account. The regular savings account is that account that will give you some interest. I think for me, it is an account that will encourage you. There are many people who finish school and then they get employed. And when they ask them to open an account where the salary will be credited, they will go and open a savings account. But the salary account is not a savings account. And I recommend that, I highly recommend that people should not receive salaries on their savings account. It is important that the savings account is separate. Then as our needs become more complex, we might start thinking about saving our money in specific accounts that can be able to support our goals in the financial institutions. But then there are also other options like treasury bills, like bonds. There are also some very, very interesting products that insurance companies have come with that would enable us to support our savings.
Okay. Earlier you mentioned that savings is not just about the money. Yes. It's not about money. What are those other avenues that somebody can use to save if it's not just money?
Yes.
Are they assets? Are they, I don't know which other avenues are those?
You know, you're speaking to a banker today, but I will make an attempt. Depending on how you perceive it, or what is the end goal. So I have heard that, or I have seen that a number of people will save money, for instance, in goats. So I get money, then I buy goats, and then when the goats give birth, I don't know whether that is counted as interest, okay? But my recommendation is that if you want to get into a goat business, you can get into a goat business. If you want to get into a land business, you can get into a land business. My recommendation is that you save, and your savings enable you to take it to that destination.
Okay, thank you, Mr. Dennis. Would like you to give us your final remarks on saving and the saving culture, and also give advice to the viewer out there who feels like earning about 150,000 shillings a month, there's nothing to save. Someone will say that's very little money, so we'd like you to give advice to the viewer out there who feels like that or thinks like that.
Okay. Thank you very much, Aggie. First of all, I would like to thank you. I would like to for coming up with these very, very interesting topics, which are extremely important. There are very many things that we take for granted and are missed, which are very, very key. My advice about saving is that whatever amount that you're earning, you spoke about 150,000. There are people who earn much less than 150,000, but they are able to save. What I would like to tell the viewers is that there's going to be a time out there when you're faced with an emergency, and you need to start with something. I'll just give an example. So, if you have a relative, for instance, who has gotten an accident or needs money, has an emergency, the discussion about, please, I need 100,000 shillings to be able to meet this emergency is very, very different from, I need an additional 85,000 shillings to add on to the 15,000 shillings that I have. But everybody needs to put away something for a rainy day. And come day, come rain, come sunshine, that time will come when you need.
Absolutely. Well, you had it from Mr. Dennis Chibukamsoke. He says that it doesn't matter how much money you earn, how little it is, remember to put that little money aside for the future, because we never know. Every day comes with its own rules. Well, thank you so much, Mr. Dennis, for joining us here on set today.
Thank you, CTV.
Well, that is what we had for you in the segment of wellness, beauty, and lifestyle, and we were talking financial wellness and financial management. My name is Agi Oase. Do not go anywhere, because Sunrise at Sea continues. Don't blink.